in the syndication business, we don't have a business without our investors, right? That's something that is near and dear to us as a company. People have worked very hard for their money, and they're trusting you as an operator, and you're a steward of their capital, right? We would rather over communicate to our investors and just show that respect.
This is your daily real estate syndication show. I'm your host, Whitney Sewell. We are back again with our guest, Shane Thomas. Again, I hope you listened to yesterday's segment with him, but you're going to hear again us continue the conversation. We're going to dive into all the way, those asset management reports or property management reports, right? We took those yesterday, and we're taking those all the way to the investor today and what those reports should look like. Shane, welcome back to the show. Honored to have you on again.
Hey, thanks, Whitney. Happy to be here again. Enjoyed it.
Yeah, I'm glad the listeners are back with us again today. Just in case you missed yesterday, I hope you'll go back and listen to Shane's interview or yesterday, where we dove into these reports that you get from property management, right? And what you should expect as the asset manager, or if you're not the asset manager on the team, maybe you're managing that individual. And he just laid out a number of things that you need to know, whether you're that person or not. You need to ensure they're looking at these things. He listed out a number of leading indicators that he looks at on a weekly basis. It's just a great list of things that I hope that you as an operator are looking at, or if you're a passive investor, that you're ensuring your operators are watching as well. But we're gonna continue that conversation today and dive into all the way down to the investor update. And so let's do just that. Shane, again, thank you for your time with us again. And so yesterday we were talking about those leading indicators and things you're watching, and all the way down to your asset manager and your fractional CFO, and then putting this stuff together. And let's just continue there. And I want to get all the way to the investor update, itself, right? And so now you've gathered this information, they've looked at this together. Let's just keep going from there.
Yeah. So I think, obviously, in the syndication business, we don't have a business without our investors, right? And I think, that's something that is near and dear to us as a company. People have worked very hard for their money, and, they're trusting you as an operator, and you're a steward of their capital, right? And I think, based on some of my experience as an LP, there was, a lot of communication up front when we were trying to buy the deal, and then I invested passively, and then there was just no rhythm or cadence. It was just, they would give updates, kind of, just randomly. And, and honestly, some of the deals performed well, but I don't think those operators, would have performed as well in today's market, and so, we kind of have this saying that, kind of no news is generally considered like bad news, and so we would rather over communicate to our investors, and just show that respect, right? So a couple things before we get into reports. It's a huge pet peeve of mine. If somebody reaches out to our team, we've got a separate, current investors inbox. And I told my team within 24 hours, business hours, they need a response. These folks have invested 50, 75, 100K plus. They need a response. We may not know the answer, but we need to respond to them, say, hey, we're looking into it. So that's kind of like one of the rules at our company, if you will. And I just take that to customer service, right? I think as an LP, it's one thing that if people are not responsive from the beginning, that's generally not a good sign. So what we've developed, and it's nothing that's rocket science, but I think our whole philosophy is that we want to treat our company, even though we're a smaller boutique, like a larger institutional private equity firm, right? So that, if we were going to start doing deals with family offices, private equity, we have the systems, reporting, processes down pat, right? And I think that comes with, a starting point for us is taking all this data that we do on a month-to-month basis. And sure, there's probably 1 or 2% of the investor base that wants all that data, but more often than not, most of these folks, want the summary view, right? How it impacts them and their investment. And so we take all that data, and on a monthly basis, without fail, you're going to hear about your deal and from Catalyst Equity with the standard monthly report. In the first year when we buy a property, and generally what we buy, Whitney, is value add deals that, between the first 18 months or so is really when we're doing the heavy lift. we always do a six-month webinar, right? Because one thing to send out a monthly report, it's in PDF, you got all the addendums and financials attached. But at 6-month mark, we say, hey, you guys invested 6 months ago. We do a webinar, which is 30 to an hour long. We go dive deep into our quarterly results. And then we give an opportunity. We talk about what's coming next, what are our challenges, our risks. And then we give an opportunity for folks to ask questions. They could ask questions throughout the whole time anyway, but it gives them an opportunity to hear from us, and then on a yearly basis, we do an annual webinar, right? And that's a reflection of basically like, how do we do, kind of grade us from, we intended to do this, our projections, this is what happened. And then we kind of give a go forward of this next year, right? And I think, we always talk about the risks. We always talk about the challenges. We talk about the wins as well. And then go forward from there. Monthly reports happen every month without fail. And then we do annual webinars. So that's kind of our standard. And then if there's anything that happens, in the interim, COVID was a good example, right? Instead of having monthly reports, quite frankly, for like, I think 2-3 months, we were giving weekly reports just to let investors know, quick emails. Hey, this is what's happened. This was our occupancy. We can't evict, et cetera. So we did that. And then we scaled that back when things kind of came back to normal. If we've got a challenging deal for whatever be the reason, right? We'll do a webinar, even if it's halfway year 2, right? It wasn't scheduled, but hey, we're going to do a webinar. If we're going to go sell or refinance the deal, we'll do a webinar to say, hey, this is why, we did an analysis. This is why we think we should refinance, et cetera. So we've got our standard process, and then there are these ad hoc, kind of items that happen that we, address those. But I think given that cadence and the fact that, our folks on our team respond to investors within 24 hours, we just want to give that good customer experience because, we're not perfect. Not all of our deals are perfect. There's always some challenges. These are investments.
For sure.
But we want the investors to know that we're doing everything we can, and that's basically our process.
Yeah, I guess help us to kind of see your update, right, audibly. Like if I was looking at your update, I guess what's kind of a layout that you all present to investors, and what are some crucial things that you're definitely including on a monthly basis? I mean, whether it's market data or whether it's deal specifics, occupancy to whatever, details there to distributions to, give us some, paint a picture for us.
Yeah. Basically, I mean, it starts with, we've got a report that has, and this is the flow, right? It starts with sponsor commentary, right? And basically that's, hey, we just ended the month of June, our occupancy was X, Y, and Z, compare that to last month or last quarter, whatever's relevant. Our collections were X, Y, and Z, above or below budget for whatever reasons, talk about any, uniqueness in the expenses. Like sometimes, in Texas, taxes will come out and you'll have to accrue, or you had a insurance renewal. So those are like one-time events. So we kind of give the sponsor commentary that helps them understand that month, right? And then we've got, basically a P&L summary. And essentially that P&L summary at a high level says, what are, on a yearly basis, a T3 basis, which means last 3 months, and a T1 basis, right? Where our actuals relative to budget and the variance for that. So then, we could say, hey, T12 is here, but we're trending upwards, or whatever the story is. We've got charts that follow to show kind of the, key trends and expenses. And then we've got a CapEx update, which after we've completed the plan, that becomes a little bit more light. But in the first 1 to 2 years, it's, hey, we knocked out phase 1 of our CapEx plan, which was most of the exteriors. We're now doing, 10 units a month on the exteriors. They're getting this lease trade out. These are some of the challenges we're having with materials and sourcing. So, and then we include pictures of, this is the before unit, this is our after, this is our old signage, this is our new signage. So we include pictures. And then at the end, we kind of close out with a admin / distribution, right? So if it's admin, it's, hey, we've got a webinar coming up, your invite will follow, or hey, taxes are going to be available in the portal March 15th. If it's a distribution month, we talk about, hey, this is our results. This is what we're going to distribute. These are what we're keeping in reserves. This is when you're going to get it. So that's the general premise of our report. And then we've got attached to that, we've got the P&L, balance sheet, a rent roll. And then in our portal, our investors can go and, download the 200 different reports that, our property manager shares with that if they want to, I should say.
Can I ask what portal, investor portal you all use?
Yeah, we're on IMS.
Okay. Yeah, like Real Page.
Yeah, Real Page.
Yeah, no, I'm familiar. Quite familiar with them. But so you all ultimately will upload those reports from property management to the portal, and then investors can log in and see those reports.
Yeah, I would say less than 2% actually will review that.
Yeah.
I think with our PDF, that's ours, and those three main statements: balance sheet, P&L, and rent roll. Most investors are, that satisfies them.
Yeah. Every once in a while, I get an investor that called me at like 8 a.m. He's like, Whitney, I was looking at page 13, line 42 last night at midnight. And
Right,
that's
right.
very rare. Right. But
Right.
however,
Very rare.
I do love that I do that information is available. Right.
Yeah.
Or just putting it out there, just the transparency, of that as well, that you all are putting it in a portal, or if you want to see it, it's there. We're happy to walk you through it, or answer questions. But at least it's, it is available, right? So they can see it. This report too, I even internally at LifeBridge, it's like, it's morphed into a number of things, right? Over a lot of time. And as we try to improve this process, are there any ways that you found to maybe streamline this, in a way that maybe you didn't know 2 years ago, right? Or any thoughts behind, hey, when we started doing it this way, or this process from these reports, or I don't know, just any thoughts behind
Yeah.
that?
So I think that's a great question, and one that honestly we grappled with for a couple of years, because you get a report from one property management company, it looks a little different, then you're trying to analyze it. This deal story is different. And I think the game changer happened for us when we have our asset manager and fractional CFO, and we built a template, right? We literally built a template that we take all this data, right, and we push it into our template that we use to analyze our cash and all this stuff. And then that standard template, we've got, basically our report tabs, and we're pulling the same data that we've already mapped into our template. And then we're pulling that data. And so our asset manager is not thinking like, oh, for this deal, I got to go do this. And for this deal, I got this property management software doesn't have this data. We've already figured that all out, right? And so when we come to generating reports, it's really the numbers are already there. It's really the story that we just have to do every month, and I think that's been a huge game changer. And a couple other things that we have in our report now that I think about it is, we've got, hey, because a lot of times investors are in 20 deals, right? They don't know that, hey, we bought this deal at this time, this is the equity, this is the value right now, this is our interest rate. Another thing that we do, Whitney, is we create, this may be getting into too much detail, but a lot of investors need to update their schedule of real estate owned, right? SREO. And in the beginning, I used to get random emails like, somebody's buying a deal or whatever, and they're like, hey, I need, these 20 things filled out, right? And then, in the beginning, we're like, okay, we'll do it. And then starting like 4 years ago, we just said every deal, we've got a template. It's going to answer every question you need. It's on the portal for your deal. Download it and you can fill it out, And so that kind of alleviated some stress from our back office team.
Okay, so that's helpful. I mean, that's a way that you're adding value to your investors, right? And you're relieving that burden for your team, right? And I love that because it provides an immediate response to your investors too that need that. Right, here's the information.
Yeah. Otherwise, I'm traveling, or my business partner, when we didn't have a team, I'm traveling. I'm, and I'm like, what? And this was a total game changer. And we communicate that up front. We buy a deal. Hey, these are our admin steps. Welcome, frequently asked questions. We've got this guide, and this is here. And so, I mean, it's reduced. I mean, honestly, I used to get, just call it, I don't know, 5 requests a month, and I probably get 5 requests a year now.
Yeah.
And those folks just didn't remember that it was there. So,
Shane, I'm going to shift gears just slightly here, but just a few final questions, in the show. But I know you are also involved in acquisitions and are good at acquisitions and finding deals. And so I want to ask everybody, especially operators like yourself, just your predictions, you're right. What do you think's happening the next 6-12 months? And obviously nobody knows exactly what's going to happen. However, what we believe affects what we do, right?
Yeah,
Our
yeah,
actions,
yeah.
and if we're buying or selling or all those things. So I just wonder, what your thoughts are, what you all are doing, how that's changing that steps you all are taking, right? The action you're taking.
Yeah. No, obviously we're in a very interesting time right now. And I think, market wise, it's probably the most challenging market multifamily wise since I started in 2015, transactions are obviously down 70 to 80%, depending on the data source. I think, where we are right now, I think there's a lot of opportunity. It kind of reminds me of, 6 months post COVID, at that time where everyone was just frozen and, there wasn't a whole lot of deals to be had, but like, there was the deals that were selling, if you look, fast forward 2 years from now, they bought at great bases. And it feels like that right now. There's a lot of fear and uncertainty. But, I'm seeing, pricing that's, 10, 20, sometimes 25% off peaks. And I think, a lot of more clarity is here now, given that, the Fed's kind of indicated that, we're closer to the end, there may be one or two more hikes, but we're closer to the end. That doesn't mean, anyone knows when rates are going to drop, but it feels like right now, from a pricing standpoint, the power's definitely shifted back to the buyer. It's probably the first buyer's market that I've really been in since 2015 in this business. We're selling a few deals, or we're trying to sell a few deals. So we know, firsthand that the terms you're getting, aren't, seller friendly. And so, I think there's a lot of demand for multifamily. Obviously, the cost of home ownership with interest rates up, fuels our business. I think, there's a lot of supply coming online right now, given that low interest rates of 2 years ago, it generally takes 18 to 24 months for this stuff to get built. But I think from the next 2 years, there'll probably be a little bit lower supply, right? If you look at data right now, permits are down. So there could be some good rent growth in 25, 26. So I think, there's going to be some shakeout, I mean, for the most part, if you're well capitalized and you have a long runway, I think, at the end of the day, you just never want to be a forced seller in real estate, and so if you have enough runway, you should be able to see it through. And, given that, home ownership rates, I think, have peaked in this country, long term, there's a shortage of housing, multifamily units for sure. And so I think there's long term a lot of potential. Do I think the years of doubling your money in 2 years are going to come back? I don't think so. And we never planned for it. I mean, honestly, I'm a firm believer of holding real estate. I think it's, it becomes more of a wealth creator than, having this transactional like every 2 years. And but look, you got to take the opportunities when they present themselves. So yeah, we're looking to buy right now. I mean, we're, in 3-4 best in finals the last couple months. It is hard right now with interest rates, and I think investor sentiment, when they see the stock market, and you could put, get 5%, in treasuries right now and whatnot. So I think it's just, but having the long-term view, right? Like 5 years from now, and just look back 5 years. I mean, the stock market, yes, the last 6 months has done great. Let's look at it over 60 months, and so, yeah. But yeah, I'm optimistic. I think things are going to start, thawing, if you will, the next little while. You're starting to see some of these deals where operators maybe weren't well capitalized, have rate caps expiring, and they were hoping last year, 2023 Q3 rates are going to come down. I'm going to hang on till there, that and now we got to wait maybe another year. So I'm seeing some signs of more deals, coming to market. So I'm optimistic. I think in 3-4 years from now, guys that were able to buy in this 12 to 18 month window will be thankful.
Yeah. What about what's your best source for meeting new investors right now?
I mean, we go to a lot of events, and so that's, I mean, I think that it's hard to replicate that in-person touch and, feel. Referrals is huge for us. And so that's a good source. And then, we're relatively active on social media. We've written a lot of blogs on LinkedIn. And so, we're trying to improve that, it kind of the marketing aspect. But really, referrals and networking events are primary too.
What's your best advice for passive investors right now?
I think be patient, what I've seen in the last 7 years is like investing in commercial real estate was not mainstream before, it was not widely known. Then it became more popular with, a lot of these social media and whatnot. And I think for good reasons. But then people kind of got overexcited, if you will, be patient, get your education, build your own criteria, right? Don't have like, hey, my friend's investing in this deal, I'm just going to go put money out. Have your own criteria. And I heard a saying, investing is just like, in commercial real estate, it's just like, like a train, right? There's another one coming, and so I would say be patient, do your due diligence, make sure that that investment opportunity that you're considering matches your predefined criteria, right? Because you could be a growth investor like me. I'm not necessarily not looking for cash flow when I'm investing, or you could be a cash flow investor, right? Where you're like, I don't really care about growth. I just want a little bit of cash flow. And so, and then, types of assets and obviously team and sponsor. But I think, be patient right now is my advice now and, always.
What are some of the most important metrics that you track? And it could be personally or professionally, or I mean, it could be, I would say it could be as simple as how many times you get out of bed on time, or it could be your bench press number, or it could be how many deals you all are underwriting, whatever the most important metrics are to you.
Yeah. I mean, there's a lot, I mean, big macro wise, right? I'm looking at job growth, just population growth. And then, I look at, the interest rates, obviously, but from a business perspective, we know that based on the number of deals we've done, how many deals we need to look at, how many deals we need to offer at. So those are weekly things that we look at, like how many deals we need to tour, so we track that, because if we've got a goal to do X amount of deals and we're not touring enough deals, you're not going to get deals done, right? But yeah, I mean, it's really macro wise, population, job growth, where are people moving? Are we in that path of progress? And then company wise, are we, doing enough blogs? Are we doing touring enough deals, underwriting enough deals? And we track, how often we talk to brokers, right? I mean, like when every week we've got a list of 40 or 5 brokers, we want to touch at least 15 to 20 of them every week, and if we're not doing a good job of that, that's going to impact our deal flow, so things like that.
Nice. No, I like that. Any other habits that you're disciplined about that have proven?
I mean, I think this is probably common with a lot of folks, but I was never an early riser. But 10 years ago, kind of, life, kids and whatnot. And I love my mornings, and it's just a game changer. Honestly, I think I get most of my actual work done, before 7:30 in the morning, and then the rest of the day, calls and whatnot. But that is my time. No one's up, no one's pinging you on Slack or email. And, those 2 to 3 hours, have really changed, kind of, just how I work. And, yeah, I think that's been a good habit. And then, yeah, I try to keep my evenings, for my family.
Love that. I appreciate your importance on the family as well. And I couldn't agree more about the few hours in the morning. I woke up this morning about 4:15, and I thought, I'm just going to go ahead and get up, because it's like I can get so much more reading and work done, during that time uninterrupted. What about the number one thing that's contributed to your success?
Just surrounding myself with like-minded people. I think, coming from a corporate American background, you're surrounded by people that, have that goal or whatnot. And, when I wanted to kind of pivot and translate into, business and entrepreneurship, just really kind of seeking out folks that were doing that, and I think, in this business, it's a team sport. But that change, I think, truly helped, because, otherwise, I don't think I would have, grown to where we are now. And, continue to, try to get yourself in rooms that you quite honestly probably don't deserve to be in, and so, just like, I'm starting to play golf now, and I like to play with guys that are better than me, and it improves your game, and you kind of think how they think. And just like any element in life, right? Go seek out the folks that have done it, ahead of you and from before you, and you can learn a lot more that way.
No doubt about it. That's some wise words there for sure. How do you like to give back?
So we give back a lot here in terms of our time, in the community, meetups, and we do a lot of real estate education and whatnot locally. But I think what I'm most proud of is underprivileged children in India. There's a orphanage there that we support. My wife and I started it, 10 years ago when we got married, and we support to that annually, and we want to continue to do that. So that's underprivileged children and children's education is very important to me.
Awesome. Well, Shane, grateful for you sharing that, but grateful for your time today and yesterday, and staying with us so long, and just really diving into your all's process, right? From asset management to that, how that trickles down to a great report or product, for your investors to inform them so well. Just grateful for your, just sharing through that, because that's helpful to me. And I know many other operators and investors, passives that are listening. It's important, right? They want to be communicated well with, and I don't blame them. I do too as an LP, right? And so I just appreciate your transparency in helping us. Tell the listeners again how they can get in touch with you and learn more about you. Yeah,
thanks, Whitney, again for having me. You could reach me at Shane@catequity.com. That's my email. Our website is catequity.com, and I'm pretty active on LinkedIn. So you can find me there under, Catalyst Equity Partners, Shane Thomas.
Thank you for being with us again today. I hope that you have learned a lot from the show. Don't forget to like and subscribe. I hope you're telling your friends about the Real Estate Syndication Show and how they can also build wealth in real estate. You can also go to lifebridgecapital.com and start investing today.